Let's get back on track. So Alex Kanaja, I think that's right.
You nailed it, James.
No, well, that's not bad. I usually get these things wrong. I'm terrible with names, but there we go. Thank you very much for doing this. Gore Street Energy Storage, I think it's an interesting fund because it's battery storage, but not just UK. And there's lots of different moving parts to it, which I think it's going to be interesting to find out about. So if you just sort of run through the premise of the fund, please, first, and then we'll get into some questions on after that.
Yeah, for sure. Thanks, James, for having me. So what's the overall investment thesis here is driven by our energy transition. It's clear we're adding more and more renewables to every country's grid. Renewables, by their nature, excellent electricity source and one that we need desperately to replace hydrocarbons, but intermittent, will produce electricity when the sun shines and the wind blows. That's very trackable, month to month and over a year. Second to second, minute to minute, less easy to track. So all our grids are undergoing this quite incredible transition, and to enable renewables to continue to grow as a percentage of the grid and to continue to decarbonize the grid, you need to add in assets such as energy storage to help stabilize the grid. And that was the thesis that Gore Street started looking at way back in 2016. We started adding assets to a portfolio in 2017 and IPO'd now 5 years, James. Seems like it doesn't seem that long ago, but
that's incredible.
Isn't it? Right? I remember having kind of chats with you back then. So we IPO'd May 2018 on that basis, and been I think successful since. It's been I would say a journey. As you might recall, James, we IPO'd at 30 million pound market cap. We're now around the 500 million. We IPO'd with 10 megawatts in our portfolio, and we're now at nearly 1.2 gigawatts. So this is our portfolio, 1.17 gigawatts. It's interesting to see if you look, and I've mentioned here, Bulby, this number one asset here on our slide, 6 megawatts. 6 megawatt hours. It means that it can produce power for 1 hour. So that when we had that commissioned back in 2017, it was one of the largest, I think it was the largest privately owned lithium ion asset in Great Britain, and I think one of the largest assets of its kind doing grid balancing in the world. If you look at our latest transaction, Big Rock in California, 200 megawatts, 400 megawatt hours. So there's just this incredible growth in the size of the assets alongside a maturity of the sector. So we've obviously been investing here for a long time. We created this asset class for the public market with our IPO. But what we see is more and more manufacturers of quality, more and more revenue streams available to us, and an absolute realization that energy storage is this kind of critical asset that allows our transition to help fight climate change. I would add in that since early last year with the tragic events in the Ukraine, energy security also features into a kind of underpinning to our investment thesis. So this is our portfolio. We very integrated into our investment thesis is that we have the same worldwide supply chain for energy storage. Our assets are doing more or less the same type of activities in terms of revenue in the different markets that we are in, and therefore we wanted to build a diversified portfolio, not just be in one locality. So we are quite uniquely, I don't believe there's any other even utility, definitely not financial sponsor, that's operating in 5 different energy systems. So Great Britain, which is one energy system, Ireland, north and south is one grid, Germany, Texas, and California. And that diversification is very, very important to us, and I think will really be to the benefit of our shareholders going forward. Next slide, please, James. So I touched on it, but how are we making money? I think energy storage is this really interesting asset class It's firmly within the world of renewables. It's critical to our energy transition. But unlike, for instance, solar and wind, you own solar and wind. You produce electrons and you sell electrons, and you hope that you're selling them in a regime which either has a set of contracts from the government, which you hope the government continues to respect, or and you hope that the market price for the energy is as you forecast. In energy storage, our assets can do multiple things, and indeed we are doing multiple things. We have kind of three areas where energy storage can generate revenue: grid balancing, keeping the grid balanced in voltage with the growth of renewables and the decommissioning of oil, gas, and nuclear. Multiple different types of contracts here in GB. There's literally 5 or 6 different ways of making money in grid balancing, and my colleagues in Gore Street on a day-to-day basis are looking at which contracts our assets are best situated in. Ireland, grid balancing is under their DS3 contract, and there's 2 types there. And then similar types of market structures in Germany, in ERCOT, which is the Texas market, and then California. Peak shifting is where we're making our assets available for times of high demand, high consumer demand. This is a governmental contract. We were recently in the capacity market auctions about a month ago, and we did very well, locking up 15-year contracts, index linked. In Ireland, also capacity market, same in California. And then finally, trading, which is in essence buying electricity at the trough and selling at the peak. This is not a market that is that important yet. Overall, anywhere between 3 to 7% of revenue. We do it when it is available, and that's usually at times of very high volatility on the grid. But really, in energy storage today, it's around grid balancing. That's the high revenue contracts. Next slide, please. And the slide really demonstrates what I was mentioning earlier around diversification. So we obviously started investing in GB in Britain. It has been up to, I would say, about 2019, the most important energy storage market globally. A very strong growth within it. The national grid, which runs the grid, England, Scotland, and Wales, was very advanced in terms of its thinking, in terms of the contract types it was putting out, encouraging asset owners such as ourselves to invest into energy storage on the grid. But obviously other countries continue apace. We moved into the Irish market in 2019, fundamentally a different organized energy system, but with the same characteristics and the same revenue opportunity. We moved into the German market early last year. We bought an operational asset from Enel. We also moved into the Texas market early last year, and then we consolidated that with more acquisitions in Texas, and then recently an acquisition in California. And so what's very interesting is, though those energy systems, those grids, same characteristics, same type of operation, same type of systems, but are uncorrelated. So we're not tied to one country's performance, and that, again, we believe will give a much smoother revenue profile across our portfolio. Large 1.17 gigawatts energy storage. These systems anywhere between 6 to 18 months in terms of build out. I think we'll probably talk about it later, James, but one of the big constraints in the markets is the grid connections, getting the grid connections. So it's all about, for us, we purchase assets from developers with grid connections, dates confirmed, obviously land secured and permitted, and then we work back from that grid connection date in terms of the construction. We have, I think, quite uniquely invested very heavily in human capital. So we have a procurement group, a construction group, an asset management group. So we control these activities very tightly. Right now, 292 megawatts in operation, significant assets coming on stream here in GB through the rest of this year, the rest of the next 9 months. And then as we look forward into next year, in the first half, we see assets in Texas, as well as an extension of existing assets in the Republic of Ireland coming on stream, a little bit further out towards the second half of next year, we see a further asset in the Republic, and then Big Rock, I Love Americans, like the way they named it, coming on stream in California. Then further out again, 2025, 2026, we have some considerable assets. Middleton, 2026 grid connection, 200 megawatt asset to the north of England, be really, really significant part of the energy infrastructure of GB. Next slide, please. I put this slide in here, and it's, to be a good investor in renewables, this is not just about energy storage. And I've been investing in renewables nearly exclusively since late 2006. You need to obviously understand finance. You need to understand technology and how it operates, how these assets operate, but you also need to understand policy. Some really big policy moves around the world of climate change and renewables recently. The biggest is the Inflation Reduction Act, absolutely game-changing, probably the most important piece of climate change legislation the world's ever seen. And, to distill it down, we look at our US portfolio. Those assets, when they become operational, will be able to receive a payment of at least, and it could be even higher, but at least 30% of CapEx. In a worldwide supply chain where more or less pricing is kind of similar globally, there's some local differences in kind of construction in human costs, but more or less the same price. This is obviously a massive driver of interest then in investing in North America. America is now the largest storage market in the world. It was undergoing, in any case, a really considerable boom in solar and wind as those prices continue to fall, and it's by far the cheapest electricity generation source now. The Inflation Reduction Act will further accelerate that. We were fortunate in terms of our activities in the US. We've been working in the US market for many years now, and have our investments of last year, not the operational ones, but the assets going into construction, we believe will all benefit from what is a very considerable incentive for us to have storage on the grid. But it's also a virtuous circle. So solar and wind benefit from this act, and therefore more solar and wind will get built. You build more solar and wind, you need more storage, which also benefits from the act. So overall, a very strong piece of policy, which is encouraging a large amount of investment into the US. Next slide. The EU has responded. The EU and UK has responded both by complaining, so unhappy with the US and what they think is an act designed to lure investment into the US. Which absolutely it is. EU has put out some recommendations recently. We were very happy to see that storage was a critical part of that. Mainland Europe has been slower in developing storage than, for instance, GB or Ireland, and that's really to do with the fact that the main countries like France and Germany, they balance each other's grid, so they've got a very large grid, which allows the imbalances that storage deals with, for instance, in GB or Ireland, to be less critical. But that is changing with the massive build out of renewables, plus, of course, the concern about energy storage, given the war in Ukraine. So the EU put out some very good thoughts here. We are waiting to see how those thoughts come into actual legislation and what the process is around that. We hope the EU moves fast on this, but for sure, from a storage perspective, we were very happy to see a lot of things here in the 14th of March announcement. Next slide. As we look forward, we do see, we obviously have large pipeline in mainland Europe, GB and Ireland, but worthwhile highlighting the US. It's interesting as well. The US obviously is a very large country, but their grids are quite isolated. So Texas is its own grid. It's about the same size as GB's grid. California about 50% bigger, not quite as isolated as Texas, but still operates as its own. So in essence, these are islands of themselves. So that means that the need for storage is kind of dramatically increased. We have a very large pipeline in the States. We have a present portfolio of just under 350 megawatts, but a pipeline of around 900 megawatts. So very interesting investment targets for us as we look forward over the next 24 months. So how would I conclude here in terms of short presentation on our activities? We've been at this a while. It is great to see the interest in energy storage being a lot more than when we were banging the drum of it around back in 2016, 2017, and even 2018. It is absolutely accepted as this critical asset class, which will have a significant amount of investment going into it. So the market outlook, as we sit here today, has actually exceeded our expectations. We think if we go back in time to 2016. We are an active manager. We think this is really important in what is absolutely a complex asset class. So from acquisition, operation, optimization, all of those tasks are held internally, and there's a large team of my colleagues in Gore Street focused on it. Lots of assets in construction, nearly 900 megawatts in construction or pre-construction stage. We have a good amount of megawatts in kind of near-term end of construction period coming on stream over the next 7 to 9 months. And all of these characteristics have led to a strong financial performance. So 13%, I believe, for the overall. We've been averaging every 12 months around a 13% NAV total return. So I think in an asset class where we underwrite our assets to a 10 to 12% unlevered, we're managing to kind of overachieve against that target. So very proud of the performance of the company.